Hey folks, welcome to another episode of Business Redefined. This is your weekly, most comprehensive look at the world of business, finance, and economics. It's not Tuesday, it's Monday, but why not have two conversations? We'll talk about matters retirement planning and employee benefits. So we are privileged to have the GM in charge of employee benefits and retirement solutions, that is at Jubilee Life Assurance, Madam Catherine Kagata. Thank you so much for joining us.
Thank you for having me, Julian.
Karibu sana.
Thank you.
Let's start with a conversation about human capital, because all this centers around the conversation on human capital. Why is this particularly critical for Jubilee Life Assurance?
Julian, as you know, human capital is the corrective skills, knowledge, and also the attributes that people bring to the organization. And you'll appreciate that without people in the organization, the performance of the company will not be good. And therefore, for Jubilee, we've invested a lot on human capital so that our productivity for our staff and also the performance for the organization is good. And we have seen that over the years. And our people in our organization are switched on. They actually service our clients well. And we have a lot of repeat business because of that. So for us, investing in human capital is very critical for the growth of our business. Yeah.
Whenever we have a conversation around pensions, there is the view that Kenya has a very low savings rate. And this comes out in official data. Is this an assessment you share? And what do you think we should begin doing differently to address this challenge?
Yes, when we look at the pension savings culture in this country, it's quite low. And we have seen that even from the perspective of the schemes that are registered in RBA, that is the Retirement Benefit Authority. And this is because most employers do not see a retirement scheme as a mandatory requirement. NSSF is there, but as you appreciate, the savings culture in the country is quite low. And previously we used to contribute 200 shillings and our employers used to match that. If you look at that amount, is quite low. Recently, we started implementing the NSSF Act 2013, that is from last year, and we expect that the contributions will increase over the years. And as you look at that, we are focusing on financial security at old age. And if we look at the country, most of us the old people depend on the working class. And that is not sustainable. Life is becoming difficult every now and then. And so we would want to talk to our employees and employers to appreciate that there is need to increase the saving culture in the country. So yes, you're right that the saving culture in this country is quite low. The schemes that are registered with the Retirement Benefit Authority are quite low, and there is need therefore to increase the savings in this country. Yeah.
But Catherine, in a market where 8 out of every 10 employees are in the informal sector, how do we curate products which then rope the informal segment on the market into formal pension coverage?
What I would propose, or what should work for this country, is trying to look for products that will go as low as the lower level, contributions as low as 200 shillings or even 1,000 shillings, or even daily savings. It's possible to have daily savings, and with the strong systems that are there in the insurance company and any other organizations that is investing in pension, it should be possible for people to start saving. And so our advice to people is that start saving early. If you start saving early, immediately you are employed, then you would expect that at the time that you get to retirement, then you would have substantial amount of money. The other thing we have noticed is that every time people change jobs, they withdraw their benefits. And unfortunately, I have not seen a situation where you change job for a worse of job. Most of the times you change. Yeah, but majority of people look for greener pastures, and therefore you would expect that the contributions that they are savings, they should not withdraw every time they change employment. So I would say for the lower cadre or even for the informal sector, we should come up with products that will help people to save every time that they are getting resources or they get money, they save, and we encourage them not to withdraw the money before they get to the age of retirement. Yeah.
Now, when you talk about we should develop product, what bouquet of solutions does Jubilee Life Assurance offer for what I would call an optimal employee benefits and retirement solutions package?
Okay, when you look at the solutions that we are offering, we have employer-sponsored schemes, and those are like occupational scheme, what we call standalone schemes. Like I'm sure Nation Media has a scheme. That is what the employer would call a savings plan for their people. They would encourage any employee who join the organization to start saving. And for employers who would not want to have a standalone scheme, because again, also, it is also a bit expensive in running it. You need trustees, you need to comply to the laws, and some of the employers would find that quite a difficult arrangement, which would demand more time for the employees. Within Jubilee, we have what we call umbrella scheme. An umbrella scheme is one big scheme that allows many participating employers to join in that already existing scheme, a scheme that has corporate trustees who will help us to manage that scheme in a way that scheme is compliant with the laws. So any employer who would want to join a scheme that is already compliant with the law, that has low expenses in terms of what would be expected to be administrative expenses, we would request them to join in an umbrella scheme that will allow it. We consider them as plug and play. You can just start, you can make a decision to start a scheme today, and by end of the month, after everybody has enrolled, they start the deductions and everybody starts saving. And we do encourage the employees to save contributions for retirement over and above the agreed amount. Because you see, we can agree 5%, but is 5% adequate for me as Catherine? No, I may decide, because probably I'm advanced in age, I'm at age 50, I would want to add some contribution, additional voluntary contribution. So I would encourage every employer who has a scheme to allow their employees even to save for post-retirement medical fund. Julian, you must be knowing that recently, that is last year, we saw the laws changing, allowing people to save for their future medical expenses within the pension schemes. So what we are encouraging people to do is to start accumulating the funds within the pension scheme. And also the employers can match that. We've had discussions with several employers who are thinking of setting up the post-retirement medical fund for their employee. So if an employer would want to do that, then of course they would want to have a resolution. So there are many products for employees' benefits in Jubilee. And let's not also forget the group life cover, which is a death in service benefit, which most employers have within their organization. And that benefit, when it's payable in case of death of a member of the organization, it really helps the family to continue living comfortably and also to take care of the children. I would therefore say, for any employer who is sourcing for a solution, Jubilee has solution. And not only Jubilee, the insurance industry, we continue innovating and giving employers customized solutions that will really resonate with the needs that they have in the organization.
Increasingly, I get questions from Kenyans as to whether in arrangements where they do not have structured pension benefit schemes with their employers, should they go the personal pension scheme route? Should they go the group life route? What would be your thought?
So I would recommend that any person or any group of employees to consider individual retirement schemes. There are many. And why I would recommend that is because, remember, there is a tax incentive for any person who is contributing in the retirement scheme. And so if you think about a group of people, let's think of a petrol station. We are several of us, like 10 of us. We want to save for our retirement. Then we would approach our employer and tell the employer, deduct a certain amount for probably each one of us. We can agree a percentage or whatever we can afford. That money, it would be deducted at the payroll level. So we'll all enjoy the tax deductible incentive that is given, which increased to 30,000 from last year. And therefore, for anybody who is thinking about saving, if the employer has not set up a scheme, let's consider individual retirement schemes that are in the country. Many of them have been registered. If you go to RBA website, you'll see the schemes that are registered, and Jubilee is also offering that. Yeah.
Catherine, you touched on something which is very important in this conversation, that we should be encouraged to contribute above what the employer is really deducting on our payrolls. And that speaks to the issue of the income replacement ratio. The global ideal standard is said to be about 80%. Kenyans will tell you we are struggling to meet our present day needs.
Yeah.
How will we start deferring to the future in terms of the need for the income replacement?
Yeah.
How do we navigate that?
So I believe that the major challenge in this country is the people accessing benefits before they get to retirement age. So if I change jobs, like I mentioned to you, and I access the benefit, what would happen is that by the time I get to retirement, most likely I'll just be having approximately 2 million. If you translate that to an income every month, could be like 20,000 or probably maybe at best 25,000. And probably you are earning 200,000. At old age, the bills that might not be there would be probably the education bills for your children. But think about food. Think about healthcare. And as you advance in age, unfortunately, that's when people get chronic illnesses. And so the expenses on healthcare at old age is quite high. So I would say the major challenge that we have is people accessing their benefits before retirement. And also, we do not have that conversation of what is the best benefit for you at retirement. And we need to, especially those who are in the industry, to educate the members of the scheme so that they can appreciate that there is need for them to save money while they are in employment. So the major challenge about the income replacement ratio, one is the education. People are not getting information. And we have seen like the regulator, RBA, encouraging people to attend forums when they are, which they are discussing about pre-retirement and even post-retirement product. And again, Julian, you may be knowing that some of the products that are there in the market, they allow people to access the benefit as lump sum, the provident funds. Now, if you get a lump sum benefit and you purchase or you buy a matatu, and you've never done matatu business before, be sure that your life may not be better than the people who are out there. So we also encourage people to purchase annuity product, which allow people to get income at retirement, or they can go for an income drawdown, a very recent product that is in the market that allows people to access their benefits within a period of 10 years. And we would also encourage employers to keep having financial literacy programs for their employees. Because again, it's not also about retirement. We have education policies that help members of the scheme to access benefits. Julian, the other challenge that we have is about emergency funds. You see, when, let's say we have a challenge like the COVID-19, we saw people accessing their benefits, and this is retirement money. If people had saved for emergencies like such, then you would be sure that they will still be preserving their benefits so that at the time that they get to retirement, they have that money. So money market funds are also there to help people save for emergencies and also fixed income. So in the market, there are many products. So it's just about financial planning and also helping people to appreciate that retirement is there. Yeah.
Catherine, it sounds like your view is that whenever we structure then this retirement benefits product, we should typically ring fence at least a segment of it which cannot be touched until retirement.
That is my view, because again, see, if I'm earning 100,000 and a deduction being made every month is 5% of my money to save for retirement, that it means 95% is being paid to me. And the question is, how well am I managing that money? I'm not growing younger. I'm getting old, and it is important therefore for me to realize that a time will come that I'll need that money, and I may not depend on my children at old age. So it is important that that money is preserved. So what I would suggest or propose in the industry, we need to be innovative and come up with products that will resonate with our clients. We may want to also have within the pension fund, like we are now talking about post-retirement medical fund, a fund that is invested within the pension fund that will deal with emergencies, that we can allow people to withdraw in case you would require that money. So pension funds or retirement fund should be retirement funds. Any other need that is there can be taken care of by the funds, the sub-funds that are within the pension fund. So we need a lot of innovation, and we as the industry players, we have quite a lot of work to do so that we help our people to save for retirement.
One of the recurrent challenges that Kenyans throw at me around retirement, and especially with the senior citizens, is that if you look, for example, at the insurance coverage, the premiums are so steep for senior citizens. Just speak to us about the importance of post-retirement medical schemes. I know you touched on this earlier, but because of that fact.
Now, if you look at healthcare, and especially the medical covers that are in the market today, and I would be looking at the medical covers in the insurance sector, they are quite expensive. And why they're expensive is because, unfortunately, when we get old, that is when the chronic illnesses start coming up, maybe because of the lifestyle that we lived when we were young. So those medical covers above age 65, you'll find that they are quite expensive, 200,000, 300,000. And they may look a bit expensive for common mwananchi. And what we are encouraging people is start saving early within the pension fund. And remember, this money that you are saving, it's still getting income every month. I mean, every year. When we declare interest for the pension funds, we also declare interest for that money. Contributions to the post-retirement medical fund, we don't also charge levy, RBA levy. So you can see there are many incentives being given. The RBA levy is not being charged on that money. We are also investing in interest-bearing instruments that will give us very good returns. And over the years, like in Jubilee, we have had around 10.2% average return for the last 11 years. And therefore, you can see if you invest from younger age, when you get into employment, by the time you get to retirement, you'll have quite a lot of money that you can use to purchase a retirement plan, I mean a medical cover. And these medical covers at old age, you may want to purchase with the insurance company, or if you would want to go for the products that are there, let's say in the maybe the SHIF or SHA, then you still can purchase whatever you would want. So the savings, the accumulation of that fund is what we need to look at this point in time. By the time you get to retirement, have a fund that you can access that medical cover without a lot of charges or halabis. Yeah.
I see. You mentioned something about the lump sum. And if you look at the RBA annual pensioner survey, it does indicate that the bulk of pensioners, they use their lump sum for two things. One is to construct a house. Two is to settle school fees for kids or grandkids. And increasingly, grandkids are entering that role.
Yeah.
And third is a medical issue. And retirees always tell me, these are the realities we deal with. Even if you wanted to go the annuity route, you have this emergency liquidity pressures which you need to figure out how to deal with. So how do they find that balance, if I could call it?
So what I would say is that, remember I mentioned about financial literacy. So the HR practitioners within the organization, they need to have programs that help the people to understand how they need to utilize the investment vehicles that are there. You see, if you look at SACCO's movement, they allow you to save some little money every month. And when you want a loan to build, you can actually borrow that money and build a house. It will be very unfortunate if you're building your house with the money that you get from for retirement, because then again, how will you live comfortably inside that house? That will be a challenge. So we encourage people to build their homes when they are younger, so that you also enjoy living in that house. Then again, also, the issue of people taking care of their grandchildren, yeah, we are alive to those challenges. But if you accumulate a lot of funds and you get an annuity, which will give you an income every month, from that income, you can comfortably support your grandchildren. But if you do not have a fund that is accumulated somewhere that will help you to get an income that is quite decent to help you live a dignified life and support your family, if you must, then that will be very unfortunate. So for me, the major challenge here is accumulation of fund and also access of that money as an annuity. Even if a scheme is a provident fund, it would be very advisable that an employee looks at the post-retirement products that are there in the market. I mentioned about income drawdown. If you don't want to access that money over a long period of the time, then think about income drawdown, which will allow you to access the money in 10 years period. And we have, from the regulation, you can access a maximum of 12%, which therefore will allow that money that is balanced to continue being invested, and it will earn interest. And over a period of 10 years, then you can be sure that there will be good residual amount that will be that pot that you can again roll over to another 10 years in the income drawdown. Or if you choose to purchase an annuity, you can have an annuity.
So, Karen, you're telling us how to cure the challenge of the lump sum, we might call it the lump sum effect in our pension schemes. And you're proposing that we should focus more on thinking about the post-retirement medical schemes.
Yes, I would suggest that for, healthcare is quite expensive, as I mentioned. You should encourage, or we should encourage people to save their money in the post-retirement medical fund, and that will allow every person to access good amount of money at retirement to purchase medical cover. And I also mentioned there are post-retirement funds that will help you to access your money. If you accumulate quite a lot of money at saving ages, that is the accumulation stage, then you would also be having money to help you live a comfortable life. And that will take care of any other emergencies that you may have on a monthly basis, as opposed to now having the normal harabis or even waiting for your family members to support you. So it's important also, even as we're talking about post-retirement fund, to think about the annuities and also income drawdown, because they help you to have an income every month. Yeah.
Final question, Kathleen, is so having said all that we have said around employee benefits, preparing for retirement, what does an optimal strategy for retirement benefits looks like? And what does Jubilee Life Assurance offer in that regard?
So I would say that not optimal retirement strategy would be wholesome, in terms of we would be looking at a holistic well-being of an employee. Here, when you're talking about holistic, we should also be looking about health. At the time that people are working, they are looking at many issues. There's also the mental wellness. We are talking about healthcare. So when the HR people or the organization is looking at a comprehensive benefit strategy, you should be looking at the financial security, that's the retirement schemes that we have, which provide the savings. And we should also be looking about the education for the children, for the employees, so you can have financial literacy for employees. We also have the medical covers. Most of the medical covers in the industry, they are allowing members of the scheme to access wellness advice, especially on nutrition. Some organizations also even have gym gym, and also club membership, because again, also they would also want to look at physical wellness of their employees. Financial wellness, as I mentioned, cuts across the employees at old age and young age. So in that strategy, it's important also to assess the benefits that are there. Are they making sense for employees? And you would also be looking at demographic, analyze the demographics in the organization. And why that is very important is because at workplace, we have Gen X, we have millennials, we have Gen Zs who are joining employment, and the products they are looking for, they might be very different from what a Gen X is looking for. So it's good also to have customized benefits. And in Jubilee, we are looking at all that. We have products that resonate with the employees. Then in the strategy, especially on comprehensive medical benefits, we're thinking about a flexible working arrangement. Right now, majority of employers have flexi time, remote working, and this would help employees actually to also take care of their family obligations. Remember, most of the employers, when they are looking at comprehensive benefits, they are also thinking about child support. Child support here, we are thinking about child care services that would be subsidized within the organization. In Jubilee, we are also thinking about Moms Club for expectant mothers, just to take mothers through the journey when they are expecting and even after that. So most of the employers, we also encourage them to have lactating support, where they are helping the mothers to also have the breastfeeding milk to be put in fridges and spaces that are actually private and that can allow the members of staff to relax as they even express the milk. So I would say when you're looking at a comprehensive benefit strategy as an employer, look at many things. And Julian, don't forget that there is also the compliance. You know, when you're looking at the compliance and risk management, an employer cannot absorb all the risks. That's why insurance companies are there, so that you can transfer some of the risks to the insurance companies. For instance, if you think about the medical covers, you may not be able to attend to every employee when they are unwell. So the medical covers are there to help employees to access medical services out there, and they would be treated by hospitals and practitioners who are experienced. Again, also, when we are talking about compliance, we have WIBA. We also appreciate that like statutory deduction, like NSSF contributions are mandatory. We've seen the regulators allowing the pension funds to receive the contribution under NSSF Tier 2. So compliance is very important. So as you're looking at the strategy, we need to also look at compliance to make sure that we adhere to the regulations that are there, and also make sure that the employer is also mitigating on the risk. And for every benefits that we are talking about, continuous evaluation on how these benefits are being consumed by employees is very important. So utilization rate also is very important. So I would say it is holistic. You need to look at it from the employee benefit and also the continuous evaluation, and also people managing their benefit well. So that is to say that portals and mobile platforms would be very important for employees, so that if it is a medical cover, own that medical cover. Make sure that you are accessing the benefits and you are appreciating that the medical cover belongs to you. So the portals and also the online portals will help us on that.
Thank you so much for your time.
Thank you for having me.
We've been having a conversation with Catherine Kangata from Jubilee Life Assurance, touching on employee benefits and preparation for retirement. And she has closed her conversation by giving us a perspective on what the optimal strategy looks like. Remember, it's a whole spectrum in terms of ensuring that you have your post-retirement medical scheme, you have your needs in terms of education, which will be catered for, and many other things. So remember to keep in touch with Business Defined for the breakdown of this and many other issues. Stay tuned.